Whether you love it or you hate it, President Trump has been elected. And there's been an impact on the interest rates in the mortgage market. Here's why. Hi, this is Clint with the Stitser Real Estate Group. And before we begin, I'd like to call your attention to two links on our blog. First, if you're interested in buying or investing in real property, please click on the Search Now link. Next, if you're interested in selling real property, please click on the Property Valuation link. So why did the interest rates move up so quickly after President Trump was elected? Well, the important lesson here is that market pricing, and of course mortgage interest rates are based on the price of the 10-year treasury, okay? And market pricing, whether it's the stock market, the bond market, the futures market, are based on expectations of the future. In other words, what is expected to happen is already priced in the market today. So if the market's moving, it's based on what expectations are for the future, okay? So the stock market and the financial markets were in a place based on the expectation that Hillary Clinton was getting elected and that there was going to be this balanced government where it was gridlocked between House Republicans and a Democratic president, and not much was going to change. Well, when President Trump won and everything turned Republican, then the market reacted to make changes for what it now expected to occur. Now, a raise in interest rates is an indication of future economic growth. Why? Because as the economy grows, there's a higher demand for borrowing. A higher demand for borrowing requires a higher interest rate, basic supply and demand. Moving forward, we're going to look at 4 key factors that are going to have a great impact on future interest rates and mortgage availability. Here's what they are. First, we're going to be obviously keeping down the economy. Like I said, the better the economy is doing, the more demand there is for money, the more demand, the lower the supply, the higher the cost of money, therefore the higher the interest rates. Additionally, as the economy is doing well, inflation goes up, and inflation has a direct impact on what investors are going to require for a rate of return. Okay? The next thing we're going to look at is government borrowing. You know, President Trump has talked a lot about increasing government spending and, on the other hand, decreasing taxes. That would put a really large demand on government borrowing, which would then again mess up the supply-demand between institutional investors and institutional borrowers, thereby putting more strain on the system, increasing demand and lowering supply, increasing the rates of cost. Okay? The next is inflation. As mentioned earlier, investors require a rate above inflation to protect the real value of their dollars. So if inflation goes from 2% to 3%, we can expect to see a 1% rise in mortgage rates for every percent that inflation that's reported increases. Okay? The last item that we're going to keep an eye on are the presidential appointments. Okay? As I said, the market, be it the bond market or the stock market, is priced based on future expectations. And as President Trump finalizes his nominations in key positions to the housing market, such as the Federal Housing Finance Agency, Fannie Mae, Freddie Mac, HUD, those people are going to get in place, and then once their policies and priorities are made public, the market is going to react. So what can we expect to see over the next 60 days is extreme volatility as the market reacts to what they think is going to happen based on who is hinted at Twitter to becoming appointees of different positions. So until this all settles out, we can expect some great volatility. Until then, we'll keep a close eye, and if you really want to watch it and be hawkish on it, those 4 things are what you want to pay attention to. This is Clint with the Stitser Real Estate Group, and if you or anyone you know is in the process of buying or is really close, gosh, I'd recommend they take advantage of the rates where they're at right now before there's any major changes that are beyond all of our control, because right now we're just watching. But if you have any questions, by all means, please give us a call. We'd be happy to talk about it. This is Clint with the Stitser Real Estate Group, wishing you great success in all your real estate ventures.